So if you're like most people, tax season feels like the IRS is out to get every single one of your hard-earned dollars. I get it. It's stressful, it's confusing, but here's the truth. The tax code, it's not your enemy. It's actually written to help you grow your business. You just haven't learned how to play the game yet. Listen, I've worked with entrepreneurs who are crushed every year by taxes. I had one guy who was a six-figure earner who had to pay almost half of that back to the IRS every single year. It wasn't because he was careless or shady, but it was because he didn't know the rules of how to play the IRS tax game. And that's the problem. It's not the tax code, it's your knowledge gap. Today, I'm going to break down 3 game-changing strategies that I've used with my clients to save thousands on taxes every single year, legally and ethically. There's no gimmicks here, no loopholes, just smart, strategic tax planning. So first up is your business structure. Most entrepreneurs are stuck paying self-employment tax on every single bit of the income they earn because they are operating as a sole proprietor or a single member LLC. That means an extra 15.3% of tax on every dollar you earn. But there's a quick and easy solution for this. This is making the S Corp election for your LLC. Here's the deal. With an S Corp, you pay yourself a reasonable salary, which is taxed normally with the state, federal, and FICA taxes. But the rest comes as profit distributions as an owner, or owner's distributions. And these skip the self-employment tax. You're still taxed at state and federal, but you don't get tacked on that additional 15.3%. For example, say you're bringing in $600,000 a year. A reasonable salary for this would be a $100,000 salary. You're taking the rest as distributions. That means you could be saving over $50,000 on taxes in that year. That's real money that you can reinvest into your company, or just simply take it into your pocket and go take a vacation for the year. So here's your action step for this one. You want to go talk to your tax professional and make sure that they are aware of your possibility of making the S Corp election so that you can start saving thousands of dollars on self-employment taxes. It's important to note that this strategy doesn't work with everybody. It's once you're making closer to the $30,000 to $40,000 to $50,000 net income level, that's when you want to start looking to see if it makes sense for you to make this election. The second strategy I want to discuss with y'all is maximizing your deductions. Now, I'm not just talking about the ordinary stuff here. The IRS says that you can deduct anything that is ordinary and necessary in order for you to run your business in the pursuit of income. But most people miss out on tons of legit deductions for their business. Working from home, home office, deducted. Internet, cell phone, deduct a portion of them. Travel, meals, your car. If these are all for a business purpose and used in your business to produce more revenue, you're allowed to take these deductions legally. Here's the thing though, you need to be reasonable when making these deductions and making these estimates on the percentage of business use. For example, you can't deduct 100% of your internet bill if you're also spending 8 hours every week watching Netflix. This binge watching of Netflix doesn't count towards your business expenses. These are all personal portions of your internet. So you need to figure out a reasonable percentage. Typically, I would recommend 30 to 40% is what most people come out to be if they're working from home, for example, in these different deductions that I've mentioned. For example, I've seen a fitness coach that was only deducting $3,000 a year because he didn't know any better. But after cleaning up his books and seeing where his expenses were actually going, we were able to deduct $30,000 off of his tax bill. And after applying the tax rates, that's $9,000 in tax savings. A pro tip for this is to make sure that you're using a bookkeeping software such as QuickBooks Online or Xero, just to make sure that everything is organized and all in one place and you're able to keep receipts and other documentation of the business purpose and the business expense behind all of these deductions. So the third thing I wanted to talk about was investing in tax advantage assets. There's a certain subsector of assets that you can invest in as an entrepreneur and business owner, or just a regular investor, that the government wants to see you putting money into. So what this means is you want to buy real estate, equipment, and other business assets that can be depreciated or amortized within your business. So say that you buy a real estate property and you qualify as an active investor. That means that you can deduct $25,000 of these losses from the depreciation and other deductions on the real estate off of your tax bill. After applying the tax rates, that's another $7,500 in tax savings. But if you're not into real estate, no problem. Section 179 of the IRS tax code allows you to deduct the full total cost of qualifying equipment in your business, up to over $1 million in 2025. For example, if you're running an e-commerce business and you buy $50,000 worth of warehouse gear and laptops and other equipment for your business, you could save over $15,000 in taxes just by depreciating those assets. So here's the mindset shift that you need to have as an entrepreneurial business owner. The tax code isn't designed to punish you. It's a system of incentives to reward business owners who grow and stimulate the economy. So stop thinking of taxes as the enemy and start thinking of them as a wealth-growing partner. So what's the difference between giving the IRS half of your money versus keeping most of it? Knowing the rules, knowing how to play the game that they have set up. You can't escape it in the US. No matter what, you're gonna have to play by their rules, so you might as well learn them and take advantage of them to grow your business. If you found this video helpful and you enjoyed these tax strategies and want to dive deeper or learn about more, click the resources down in the description where I have my tax-free playbook, as well as the option to schedule a discovery call with me and my team to see how we can help you on your tax savings journey. Also, be sure to subscribe to this YouTube channel where I break down free tax strategies, all for free, so that I can help you grow your business and pay less money in taxes. That's all from me today. Play the game, win the game.